Generally speaking, as I said, crypto markets tend to go bananas. So that is, we're talking currently the total market cap of crypto is about $2 trillion. By the end of this cycle, it'll be at 10 to 15 trillion. I mean, that's la land returns. But that's crypto. Crypto gives that kind of opportunity. The Nasdaq's been following this perfectly. So it just keeps going, whether we get another 20%, 50% upside in the Nasdaq, or it could be more. We don't know. You can't really tell. But the point being is the gains are huge. We'll also see commodities picking up. We'll also see, we've seen precious metals picking up. We'll see all parts of the economy and the stocks picking up as the economy's growing. Inflation's not yet a problem. And the central banks are cutting rates and adding liquidity to finance their debts. That's utopia. That's what macro summer and macro fall. It's basically market utopia.
Blockchain technology has emerged as a central force in the financial and technological landscape. According to Raoul Pal, the blockchain industry is poised for extraordinary growth, comparable to some of the most significant technological advancements in history. This booming field presents an unprecedented opportunity for wealth accumulation, fueled by the core infrastructure that makes blockchain unique. Let's dive deeper into Paul's insights and understand how blockchain technology could reshape our financial future. The blockchain industry is growing at over 100% annually. This rate is double the initial growth rate of the internet, largely because blockchain is built on top of existing internet infrastructure. With such rapid expansion, Paul predicts that the blockchain space could reach a skyrocketing valuation of $200 trillion by 2030, up from $2.5 trillion today. Paul advises investors to focus on the overall growth of the blockchain sector rather than getting bogged down in individual stories or specific projects. His investment thesis is simple. Don't miss the massive opportunity that blockchain's expansion presents. According to Raoul Pal, you have 6 years to make a fortune with Bitcoin, Solana, and crypto general. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now let's get back to Raoul Pal's view on Solana and the overall crypto market.
This is an important point. So really, of all the assets that we monitor at Exponential Age Asset Management, there are only two that beat the 8% debasement plus, let's say, 2 or 3% global inflation. So 11% is the hurdle. The S&P keeps track of it roughly. The Nasdaq does 17% a year return since 2011, and Bitcoin does 140. Gold doesn't meet it. Almost nothing else meets it. So you're really herded into two assets only that can actually beat this thing and make you money. So your future self gets wealthier. So people have been incentivized to do that. The Federal Reserve and the government understand that this is the case, and they understand that we have a lot of debt, and we understand that the collateral of the debt is the savings and investments of the population. So they don't allow it to go down much. So if you saw it last time, the S&P got down 30% in 2022 and liquidity came back. So they've stopped markets falling 50, 60, 70%. Sure, different stocks can, crypto, because it's not really a big part of the collateral system, but they don't allow the collateral to fall. So what they've done, what it means for all of us, is they've taken the big risk out.
Paul's analysis points a compelling picture of the blockchain space as the most significant investment opportunity of our time. By focusing on capturing the sector's massive growth potential, filtering out the noise, and understanding the macroeconomic factors at play, investors can position themselves to benefit from this unprecedented accumulation of wealth. As the business cycle improves and liquidity increases, digital asset adoption and valuation will skyrocket, realizing the hopes and dreams of millions invested in this transformative technology. Through the mental and emotional torture of stock market cycles, Paul himself evolved. If he had one message to convey, it would be to be a little bit more optimistic. He learned that he had the wrong mindset. Why is Jeff Bezos the richest man in the world? Not because he traded the devaluation of the pound, but because he held onto his shares, which were tech stocks, and they just went up. As surprising as it may seem, a macroeconomic commentator does not tell us stories of impending doom and destruction of capital through greed. Yes, the financial system may be one big delusion built around multiple claims on the same fragile assets, but it is better to join the system and embrace it, not fight it. He does not believe that the 2008 crisis will happen again. They can depreciate the currency, change the denominator, and the asset goes up. We cannot have a deflationary asset price or crisis. The quest for the ultimate risk-free asset is elusive. People are not irrational. The system is just set up wrong for young people. As currencies depreciate, asset prices rise faster than incomes, making it difficult for people to build wealth or buy a home. Paul advises investing in traditional assets in their retirement savings accounts, but at the same time, taking risks in the hope of making big gains. This is actually a good dumbbell-type strategy that could solve your problems. Amid brief spikes following the Federal Reserve's rate cut announcements, Paul expressed confidence in Bitcoin's long-term trajectory. Bitcoin is going up, plain and simple. Paul commented, urging market participants to learn to endure the pain of temporary fluctuations. Paul's latest insights focus on a coherent strategy for investors: buy, hold, and prepare for market challenges. According to Paul's, Bitcoin's upward movement is inevitable unless a major shift occurs, such as a significant disruption to the financial system or a disruption in technological adoption. He emphasizes that these conditions are unlikely, suggesting that blockchain technology will continue to thrive as part of a broader digital evolution. Paul's message highlights the importance of resilience and advises investors to buy more during periods of market decline. Paul has often shared similar sentiments, recently highlighting Bitcoin's correlation with rising global liquidity. He believes that Bitcoin will continue to benefit from rising global liquidity. Bitcoin price could reach around $90,000 by November if current trends persist. This projection aligns with Paul's broader analysis, which links Bitcoin price movements to trends in the global money supply, M2, which have historically influenced the cryptocurrency's growth trajectory. A recent report reinforces Paul's outlook, highlighting oversold conditions that indicate bullish potential as Bitcoin approaches its historic consolidation levels. This recent price action has reignited discussions about Bitcoin's long-term potential, with analysts speculating about a possible surge to $1 million over the next decade. Paul envisions an economic singularity by 2030, a pivotal movement when our current economic models will no longer suffice to explain the transformative power of AI. This paradigm shift, he argues, will be driven by three interrelated forces. As artificial intelligence continues its inexorable advance, concerns about its impact on employment are reaching a fever pitch. Will AI-powered machines render millions of workers obsolete, leading to widespread unemployment and economic upheaval? Paul acknowledges these concerns but suggests a nuanced perspective. While AI will undoubtedly replace many jobs, especially those involving repetitive or routine tasks, it will also create new ones that require uniquely human skills such as creativity, critical thinking, and emotional intelligence. The key, he stresses, is to adapt and prepare for this new reality. The future is inherently uncertain, not least when it comes to AI's disruptive potential. Paul's advice is to focus on building financial security in the present. By investing in our skills, education, and entrepreneurial efforts, we have the ability to create a safety net that will allow us to adapt and thrive in an ever-changing world. The future of work is upon us, and AI is at the forefront of this transformation. By embracing change, investing in skills development, and fostering collaboration between humans and machines, we face a future full of challenges and opportunities, and it is up to us to shape it for the better.